This conference will now be recorded.
Good morning, David Stites, CFP professional with Fidelis Financial Strategies. It's October 28th, and wanted to give you some tax planning tips and maybe some rumors of stuff that's floating around Congress as possible changes. And the idea is to be more proactive than reactive. There's been a lot of changes in tax laws over the past few years, and I've seen some CPAs overwhelmed because of the passing of some of the new rules and laws, just trying to keep up with it all. And then, of course, they're talking about potentially more that they're looking at. We're going to be doing tax planning, and then, of course, in the spring is when you do tax prep, as in actually filling out the forms. This is more strategy work. There's still 7 tax brackets. As I've mentioned to some of you in meetings, they're scheduled to phase out these brackets in January 1st, 2026 and return to old higher tax brackets. Standard deduction in the past was lower, so clients could find tax advantages with mortgage interest deductions, charitable giving, among other things. These days, I see the standard deduction being used a lot more. So it used to be always find whatever you can deduct in the year you're in. Now, sometimes it's more group it into certain years. QCDs, or qualified charitable distributions, are still a good idea. They're what I'd call above the line deduction, meaning you can still get a deduction for it, whether you take the standard deduction or not. RMDs were changed to age 72, meaning when they make you take money out of a pre-tax qualified retirement account. But QCDs are still 70 and a half. So sometimes I'll see people pick their favorite charity or maybe their church, and they'll give one big check once a year rather than weekly, and that allows them to get the deduction. Capital gains is still 0, 15, and 20% rates, which are cheaper than ordinary rates. That's why investing in some ways has better tax brackets. Here's some maximums for some of the retirement plans that I deal with. So if you've got a little room before the end of the year to put more in, think about doing it. And then I've mentioned in meetings just having options down the road, so that whether it's a pre-tax or maybe a mixture with a Roth, you can choose where your income comes from to find what works best for you. Because Roths grow tax-free. They don't make you ever take it out at this point, so because they don't get any tax from it. And you can pass it on to beneficiaries and they get tax-free growth. 529 college savings is kind of expanded. It can actually be K through 12 now too. Generally it stays with college because that gives it time to grow. But it's just a way to, if you're going to save for education anyway, then you might as well let it be invested and grow tax-free, and this is a way to do that. Of course, at any time you can give up to $15,000 to anybody in the world, and there's no gift tax for that. And if you're married, you can give $30,000 to a particular person and not have to worry about taxes. So if you got lots of money you're trying to shift to a different generation, say, then this is one strategy to think about. Going into some of the proposals, these are not things that are law, but these are things that are bouncing around as possibilities. I'll say as a general theme, unless you earn a lot of money each year, as in 400,000 or more each year, or you have ginormous retirement accounts, or you have, there is one area where there's a stepped up basis conversation that might apply. Most of this is not going to affect the vast majority of Americans. They want to put back in the highest tax rate. That's one of the committee recommendations, around 400,000. And they've talked about having an increased capital gains rate for that same category of large income earners. Another one where they maybe have a little tack-on tax for those that make over 400,000. It applies much sooner for like trusts. So if there's trust income going out, then the limit for when these things might hit would be lower. So if you're making big time money, then there might be big time taxes being proposed. Again, it would have to pass. They've written in this bill having the current estate tax. So again, it only applies to a small percentage of households, but if you're trying to pass on a good piece to the next generation, that limit might go down with some of these proposals. And then if you have a mega huge, ginormous, as in Tim, 20 million sitting in a IRA or Roth IRA, they've proposed some ideas to limit some of that, mostly because there was a guy they ran an article on that somehow got like 5 billion into a Roth through a loophole, or not really a loophole, but just mega getting some stuff in there at a low basis that really grew a lot. And so they were thinking about having caps on that. This one might, it's not from the Build Back Better Act, but from the Sensible Taxation and Equity Promotion Act. It's a proposal known as the STEP bill. It calls for a realization of gains at time of gifting, not sale, and a realization of gains at someone's death, not a new or stepped up basis. This law repeals the carryover of basis and brings death basis to the current market value. So, for example, if a mom gifts her daughter $250,000 of stock with a basis cost of $120,000, meaning the mom bought it for $120, gives it for, and it's worth $250, then at the time of the gift, you would look at $250,000 minus $120,000 minus the exemption of they're going to let $100,000 pass, and there'd be $30,000 of taxable income. So it's just a way to tax gifts both during life and at death different. So it's complicated, but just kind of sit down and talk about it if that is in the realm of something in the next few years. Some of those laws might be made today but apply later, and some of them might be made today but they apply, say, to the first of the year or something like that, or in a date that's already happened. So just keeping that in mind. It's just kind of a list of some of your more common tax management strategies or tax planning strategies. If this helps anybody, or if you want to pass it on, feel free to do so. And then there's some disclosures. Hope you all have a great day, and we'll talk again soon.